What's up, everybody? This is Jimmy with Decoded. It is February 25th, 2025, and it's another bloody day in the market. I'm going to make this video pretty short because, well, the majority of us were done with all the money we wanted to make for the day pretty quickly. I'm not going to bore you with live chitter chatter or anything like that. I'm just going to show you what levels we were looking for, why we took the trades we took, why we considered some of the trades that we found. And just remind you that the market is constantly talking to you and it's trying to tell you what it's wanting to do. And you just got to use that information to make your trade decisions. So for me, I took two trades today. First one was a 12.9% win and the second one was a 43% win. Both puts. And I'm going to show you why and what levels and all the justifications to why we did what we did or why I did what I did, which happened to coincide with why a lot of people did what they did. So let's go ahead and take a look at the charts and see what we got going on. So leading into the open, because of lower highs on both charts, I was ready for puts. I was okay with puts, and our put line on SPY was 596.49. Our call line was 597.43. On the Qs, our put line was 518.67 and our call line was 519.82, as indicated by these white lines here. Now, the unfortunate part is that Steve, the market itself closed below our put line before pre-market opened. Originally, we had our put line up here, but that's why planning this 5 minutes in advance, you hope that we stay above. We did not. So we relocated our put line to down here. Now, because we opened or broke that before the market opened, we pulled back to resistance. This was a lower high on Qs. SPY was stuck at resistance. Everything looked good in that respect. We knew that if we closed back above at least the pink line, we'd have to stop out if we were going to take this trade, right? So we had the comfort of knowing that we had some sellers in the market. That's really all we got, right? And then when ADD started to print a red candle, I told everybody, guys, if we can get below the put line, I'm going to take that leap. So even though the first candle rejected, came right down here, as we started to breach this, I was good to go. I was typically aiming for 517.61, which you didn't get there, but SPY did hit their pink line. Now, the pink line is the stink line. It's something we don't mess with. It is a good time to consider taking profits anytime you're in a trade, okay? Because you get a reaction at that line very, very often. Now, in this case, because I was watching and hoping for more out of the Qs, which really was only about 9 cents more, I actually gave up a fair amount of extra profit by hoping for a little bit more because of the Qs and ignoring the pink line on SPY. Nonetheless, it ended up being just over a 12% win. I'm okay with that. And then we started to move up on SPY and ADD. And I had told everybody at that time, I said, I don't like what the Qs are doing. They're putting in lower highs. I don't trade against the Qs. Now, I'm glad I said that because, well, I didn't get stuck buying calls up here, although SPY did what we expected them to do, which was go from line to line. So for the folks out there who took that trade, good for you. I was not one of them. However, while we were chopping around up here, I had made the distinct comment of, guys, I know it seems a little crazy, and I do have a recording of this. I won't throw it away in case anybody wants to question whether it's true or not. This could be a great potential entry for puts. Now, why here, right? You got to be saying to yourself, why here, Jimmy? Again, the same reasoning we were hoping that we would be okay in puts the first time we were here. We have a known resistance now on both Qs and SPY. Look at SPY was rejecting this area 4 minutes in a row before Qs even pulled back to this line, which they've rejected twice. That's just a few minutes earlier. But more importantly, we also had the confluence of ADD, guys. Look at when we're at resistance on Qs and SPY and ADD's going down, in my opinion, at least for me, that is a great opportunity to take a trade. Now, I did not take this one because I was still on the fence about considering only taking one trade for the day. So I didn't take this one. Ended up being beautiful. I had said to everybody, if we could go from here, we'd be aiming and hopefully achieving the support we were trying to get to on the first candle or the first move down, which was 517.61. Now, I can't make this chart much bigger, but without saying to the penny, I mean, we got pretty close to it. I mean, we kind of went through it by 2 cents. Guys, these lines work. You just got to learn how to use them to make your trading decisions. Like I said, entries and exits. That's all we're hoping for out of these lines, right? We want to know where the sellers are strong. We want to know where the buyers are strong. If the buyers are strong down there and you're in puts, you should consider taking your profits. If you want to stay in that trade to hold out for more, well, put a stop loss at least at break even so you cannot lose money by taking additional risk. That is changing your trade plan while you're in the trade. Right? So we find support there, we bounce off, put in another lower high, right back down to support. What is this? This is a wedge. Wedges usually break to the downside with lower highs. So it's not a surprise that it broke low, and ADD continued its trend down. Now, the second trade I did take, which ended up becoming a much better move than I anticipated, was I said, guys, if the Qs can close below 516.67 right here, that they have a fair amount of space before they hit their next support. Did Jimmy hold on that whole time? He sure didn't. But did he hold on good enough to get a nice 40+% win? Yes, he did. Now, in this particular case, I had said to everybody, I'm already up on the day. I want to try and let this trade breathe a little bit more than I normally would because I want to believe that we're going to make it down to the next support. Unfortunately, I let it breathe. I had a stop loss in, and I was hoping that the Qs were going to have a much smaller pullback than this. It turned into a pretty big pullback. Would have been very uncomfortable to hold through that, but it respected the trend line. Awesome entry point here, by the way, and I'll explain why that was a beautiful thing. But nonetheless, I ended up getting stopped out of this trade somewhere during the printing of this candle. Still a great, great win. These are big moves, guys. It's hard to see because of the way the charts are scrunched together, but we went from 516.67 all the way down to 515.07. Okay, that's a $1.60 move in 3 minutes. That pays a lot of money, and even more on SPY. Okay, so we went from 595.79, made it all the way down to 594.27. Okay, that's a big move. Okay. But I ended up stopping out because I'm a wuss. And while we were down here, I had one of my members, and you know who you are, said, Jimmy, I didn't take this trade. Where would be a good pullback to consider entering puts? I said, well, you're not going to like this answer, but the only resistance that we have known on this chart, he was asking while we were down here, I said, is all the way back up at 516.83. I said, not only do we have the trend line there, we have a double line of resistance, and the last time we tried to get through it, we failed and moved down. So, if he was patient, and I believe he was, he didn't like that answer. He was right. He's like, yeah, I was afraid you were going to say that. Well, look at what happened when we pulled back to that line. Again, we're here at a line of resistance on Qs and SPY. ADD is in a downtrend. Take the risk. I wish I would have taken this instead of this. Why? Because, well, shortly thereafter, we made it to where we hoped we would go, and then a lot more. So, yeah, ended up becoming a beautiful trade to the downside. And congrats to anybody who took those. Now, I'm going to focus here on the Qs chart for a second, because on a day like today, you either run into two problems. You either say, well, I can't play puts because the market has come down so much, I got to be buying the bottom. That's an understandable feeling. It's not a good feeling to have, but what I would tell you is maybe consider just playing the chart and what it's doing until it changes, right? So we know that higher lows are bad for puts. So if we're looking for any trade, it should be puts until we see something that would change or at least spark our curiosity to say, is the structure changing? Is there rules that we have in place that are keeping us from jumping into puts here? And the answer is yes, okay? If you are already in puts and we put in a higher low, that's a sign. It's a sign that you may want to consider getting out of those puts. Whether you're in profit, small profit, big profit, or no profit, it's a sign that the buyers are getting stronger. Accept it as the sign that it is. Okay, you don't have to react when you see it, but at least be prepared and know that everything that was keeping you in that trade or got you into that trade originally is changing right in front of your face. Okay? Accept that and respond to it, however it is that suits your plan. But we know that higher lows are bad for puts. So if you're in them, consider getting out. If you're wanting to take them, take that thought process out of your brain. Wait to see if we can leg back down farther. But the defining factor under our rules is if we close on the other side of the trend line, puts are off the table, period. Okay? We don't know where the bottom of the market is going to be for the day. We don't know where the top is going to be. All we have is what's keeping us wanting to buy puts and what's going to keep us from considering buying puts. In this case, a close above the trend line. Now, do we get into calls simply because we close above the trend line? Well, no, I don't. But what you should do is at least consider resistance. Okay, so we closed above the trend line and resistance in the same candle. And ADD started to rotate to the upside. So you had the momentum of small caps at that time and buying coming into the market. We had broken the downtrend line. We broken resistance. We were aiming for this resistance up here because from here to here is the only place that we had known resistance. Now, admittedly, we did get through this resistance, turned it into support, ultimately getting up to the next resistance high, but that would have been your trade plan, right? When we break resistance, we want to hold that as support, and then we want to continue up to the next resistance. That is how typically trends work. Now, what happened the last time we hit that resistance? Well, we had a pretty nasty sell-off there. We should expect, we can hope for different, but expect for similar results, especially if there's nothing that would tell you that maybe this time can be different. And what I'm referring to is when we got to this level on Qs, we struggled to move through it. And I had told everybody during this time, if you're holding on to calls, you want to break through this support sooner than later, or this resistance sooner than later, and keep an eye on ADD. If ADD starts to rotate to the downside, I would expect that we're going to pull back to at least the most recent support that we have on this chart. And if we get through that, we're going to go down to the next support. ADD started to roll over, and lo and behold, Qs went, and so did SPY. Okay? Then we started to leg down. Now, here's an interesting trade right here that we saw on SPY materializing before it was on the Qs. So the Qs are kind of just chopping around in a channel here. They weren't putting in lower highs, but SPY started to put in lower highs. This is not good enough for me, right? ADD was already trending down and printing red. But we said, hey, this is a lower high in the Qs. It's more likely to break support. What support, you ask? Well, this one right here. So if you're looking for a reason to get into puts, lower highs means we're more likely to break support, not hold it. So you could get in on the breaking candle. You can get in before the breaking candle, whatever you want to do, but just look for where you're aiming for next. In this case, we would be hoping to get to this double bottom or the orange line here. If we get through that, we're looking to continue down, whatever the case is, guys. Either way, we were able to spot a setup worth taking before it became a nice trade. Okay. Then we start to move to the upside. And I was talking about psychology and what we deal with a lot today, because a lot of people missed a lot of great moves because they're afraid or their emotions are getting involved in their trades. And that's understandable. It's normal, but you got to get over it. Otherwise, this becomes infinitely more difficult. But I had recognized and said loud and clear, guys, this is a higher low. We're more likely to break resistance this time, which was this guy here. And if we do that, we'd be aiming for the next resistance up, which was right here, this shit. Okay. So we did have somebody get into this trade right before this candle broke through and made 59% in 2 minutes. 59% on their money in 2 minutes, guys. Higher lows. We're not looking for puts. We're expecting resistance to fail this time. Okay? And fail it did. And we moved up to the next resistance. But if you were waiting for a candle close above that resistance, you got it here and you still got to take advantage of a nice clean move. That's a nice big candle. You went from 592.86 on SPY all the way up to 593.76, almost $1 candle in 1 minute. That pays handsomely. And then that was the last trade because it was 11:57 at that time. And well, now we're putting in higher lows and we're going to try and crawl our way back up to the north. So that is going to be the extent of this video today. I know it's 15 minutes long and I thought it was going to be shorter, but I have to explain these things and, hope that somebody out there is learning from these videos, because I got to be honest, it's starting to feel like they're a waste of my time. I'm really debating on cutting back the number of videos that I do and changing the format some more, because this is just not cutting it. Putting in more time to try and make more impact on the videos for the people who do watch them. But the time that people watch is roughly 6 minutes on a 15 to 20 minute video. So I don't know how to address that. If you guys got any helpful information that you would prefer that these videos look like, I'd appreciate some feedback. I'm doing everything I can to try and make these helpful for as many people as possible, but I'm just not seeing any benefit by putting more time into them. With that, I also didn't tell you to buy my book. You should get that. It's on Amazon. It's very, very helpful. Most everybody, I think, who's left a review has left a five-page or 5-star review on it. Apparently, it's hitting home for a lot of people. So if you're interested in reading that, it's a pretty easy read, but it is a good book. Check it out. And if you got any useful information in this video, do the thing. Okay, I'm going to try and not say that. Just do the things and the clicks and stuffs. And I hope you all had a fantastic day in the market today. If you did, good job. If you didn't, I'm sorry. And hopefully we can get it again tomorrow. Thank you guys for watching. Till tomorrow, I love you. See you.